Before we dive into the world of financial intelligence, it's important to acknowledge that the information provided here is for educational purposes only. The financial landscape is constantly evolving, and while every effort has been made to ensure accuracy, there are no guarantees. Always consult with qualified professionals for legal, business, or financial advice tailored to your unique situation. Remember, your financial journey is personal, and you are encouraged to use your own judgment and seek guidance when necessary. Now, let's embark on this journey to boost your financial IQ and empower your future. Welcome. In this video, we'll explore practical strategies to take control of your finances, reduce debt, and build lasting wealth. Whether you're just starting out or looking to fine-tune your money management skills, these insights will help you make smarter decisions. Let's begin by understanding why setting financial priorities is crucial for your future security and peace of mind. Financial priorities are the foundation of a secure future. Many people experience stress from mishandled funds and struggle to recall where their money goes. By setting clear priorities and tracking your spending, you can avoid wasteful habits and make every dollar count. A budget isn't just about restriction. It's about accountability and making conscious choices that align with your goals. A budget is your roadmap to financial stability. It helps you allocate resources for essentials and avoid unnecessary expenses. For example, if you have $50 left for food this month, you might skip that daily designer coffee. Budgeting isn't about deprivation. It's about making informed choices and ensuring your money supports your true needs and long-term goals. To improve your financial health, start by assessing your current situation. What are your main challenges? What are your strengths in income, debt management, and savings? Reflect on how you got here and what you'd like to change. Discuss money openly with your family and ensure everyone is on board with your financial plan. Clarity and commitment are key to success. Personal finance ratios are simple yet powerful tools to gauge your financial health. By tracking your assets, income, and liabilities, you can see where you stand and make informed decisions. The basic solvency ratio, for example, measures your ability to cover monthly expenses in an emergency. It's calculated by dividing your liquid cash by your monthly expenses. Let's break down the basic solvency ratio. This ratio shows how many months you could cover your essential expenses if your income stopped. For example, if you have $60,000 in liquid assets and your average monthly expenses are $25,000, your solvency ratio is 2.4. Ideally, you should aim for a ratio of 3, meaning you have enough to cover 3 months of expenses in an emergency. An emergency fund is your financial safety net. It should cover at least 3 months of essential expenses and up to 6 months as you approach retirement. Keep this fund in accessible forms like savings accounts, fixed deposits, or liquid funds. This way, you're prepared for unexpected events without resorting to debt or relying on others. Your first financial priority should always be essentials: food, water, and shelter. Set a monthly amount for these needs and avoid unnecessary splurges. Focus on maintaining your job and income, as this supports your ability to pay for housing, utilities, and groceries. Remember, taking care of your daily needs is your responsibility and helps prevent bigger financial problems down the road. Money can be a source of conflict in families, especially when partners have different attitudes towards spending and saving. Open communication and collaboration are essential. Work together to set priorities, avoid unnecessary debt, and be a positive role model for your children. Teaching financial responsibility early helps set the stage for lifelong stability. If you have credit card debt, prioritize paying off the card with the highest interest rate first. Once that's cleared, move on to cards with lower rates. Whenever possible, use cash for purchases and control your spending habits. Avoid overusing credit cards so you maintain access to credit when you truly need it. Once your credit card debt is under control, focus on building your emergency fund. This is crucial in case of job loss or unexpected expenses. Avoid the temptation to buy things you don't need and make saving a consistent habit. A solid emergency fund gives you peace of mind and financial flexibility. List your essential monthly expenses and rank them by importance. This helps you stay focused on what truly matters and prevents overspending on less important items. Once your emergency fund is secure, increase your retirement contributions and aim to save 15–20% of your income for the future. It's wise to prioritize your own retirement savings before saving for your children's college education. While your kids can access loans and scholarships, your retirement depends on your own preparation. Secure your future first, then help your children as you're able. Take advantage of free training and seminars to enhance your skills and career prospects. The job market is competitive, and continuous learning is a valuable investment. Set career goals and pursue opportunities that align with your long-term vision. No matter the size of your estate, it's important to have a will and keep your insurance policies up to date. Estate planning ensures your wishes are respected and your loved ones are protected. Review your coverage regularly and consider life and long-term care insurance if you're the primary earner. Many people underestimate how much they spend on small luxuries like coffee or eating out. By tracking your expenses, you can identify areas to cut back and save hundreds each year. Differentiate between needs and wants, and be honest about what truly adds value to your life. A personal budget sets limits on your spending and helps you plan for the future. It considers your income, debts, savings, and emergency fund. Sticking to a budget requires discipline, but the rewards, financial freedom, and a comfortable retirement are well worth the effort. It's easy to blur the line between needs and wants, especially as lifestyles evolve. Take time to reflect before making purchases. Do you really need that upgrade, or is it just a fleeting desire? By practicing self-examination, you can avoid impulse spending and focus on what truly matters. Once you've streamlined your budget, prioritize saving, even if you have debts. The classic advice is to pay yourself first. Set aside a portion of your income for savings before paying bills or spending on fun. This habit builds wealth and empowers you to take control of your financial future. Make saving effortless by automating transfers to your savings or retirement accounts. Even saving 1% of your income can make a difference. As your income grows, increase your savings rate. The key is consistency. Small amounts add up over time and help you build a strong financial foundation. If you have multiple credit card balances, consider paying off smaller debts first for a sense of progress, or focus on the highest interest rate for maximum savings. Track your spending closely and cut non-essential comforts to free up cash for debt repayment. Every step brings you closer to financial freedom. If you're struggling with debt, don't hesitate to seek help. Financial counselors can offer valuable advice, help you negotiate with creditors, and guide you through debt management or consolidation programs. Remember, asking for help is a sign of strength, not weakness. Once you've built savings and managed debt, start investing for your future. Meet with a financial advisor to create a solid plan, decide your risk tolerance, and set clear goals. Review your investment portfolio at least once a year to ensure it aligns with your objectives. There are many ways to save money around the house. Switch to energy-efficient bulbs, lower your water heater temperature, and use appliances wisely. Small changes like these can add up to hundreds of dollars in annual savings, freeing up more money for your goals. Save on water by running full loads in your washer and dishwasher, fixing leaks promptly, and installing flow restrictors. Use cold water for laundry and basic phone service instead of extras. Even small adjustments can lead to significant savings over time. Enjoy life without overspending. Take advantage of free community events, public parks, and creative at-home activities. Host game nights, explore local attractions with year-round passes, and find fun ways to entertain kids without breaking the bank. Boost your income by leveraging your technical skills. Consider freelancing, writing ebooks, or offering services like editing, web design, or resume writing. Identify your strengths and market them to individuals or businesses in need. Every extra dollar helps you reach your financial goals faster. Get inventive. Sell custom products online, write resumes, or help students with editing and proofreading. Tap into your creativity and look for opportunities in your community or online. The possibilities are endless, and a little initiative can go a long way. Taking control of your finances is a journey, not a destination. By setting priorities, tracking spending, building savings, and seeking new income opportunities, you can achieve financial freedom. Stay disciplined, keep learning, and remember, every small step brings you closer to your goals. Here's to your financial success.